are we over-debted right now? Are we up to our eyeballs in credit debt?
Absolutely. Certainly when we look at the consumer credit debt has risen to where we were pre-pandemic. Delinquencies are up. When we look at the sovereign debt in the U.S., it's extremely elevated. Interest rates are rising, and that's causing debt service to rise as well. And we're concerned about both the sovereign situation as well as consumers heading into a season when they're going to run out of excess savings.
To that exact point, Dana, we've been talking a lot about the month of September. I am interested in October, when those payments resume after years of being on pause due to the pandemic. What economic impact is that likely to have, given how this could be a very large factor in household budgets?
Well, it's probably going to take several tenths off of GDP growth in October, and it's going to weigh on the outlook going forward, because certainly if people were using credit cards to finance their debt and they were also taking that reprieve from student loan payments, when all those things come due, they're not going to spend, and they're probably going to start fearing for the economy in general, because their own personal finances will not be as robust as they were.
Are we starting to see consumer behavior change already in anticipation of that? Dana, what evidence might you be seeing of that?
Well, not really. We think consumers are still looking at the fact that many of them are still working. They're still spending on services, even though they're saying that the types of services they're going to spend on will be more towards needs rather than wants. But the point is that they still anticipate that they're going to be spending, and they're not really looking forward to the fact that, yes, they're going to have higher debts. Their balance sheets are not going to be as healthy, and certainly interest rates are going to be very elevated in case they have any emergencies where they might need to finance something. So I think consumers are not really focused that much on the future as much as they should be.
Dana, you're expert at this. The theme at Jackson Hole, and particularly our day with Managing Director Georgieva of the IMF and with Lagarde of the ECB, they both brought up fragmentation. How fragmented is America right now? How disaggregated are we in our economics?
Well, I mean, you do have very different responses to what's going on in the economy. Even when we look at our own consumer confidence measure, you get different readings by age and by income. And so we do think there is quite a bit of fragmentation in the economy right now.
Well, the fragmentation that's there, I guess we see it in a jobs report on Friday. A lot of people are waiting for, I'll say, sub 100,000 non-farm payrolls. How disaggregated is that number? I mean, it's 150 million for conversation, but is a part of that 150 million flat on their back and the other part confident?
Well, I think it really depends on what industry you're in. Certainly the industries where you have to show up to work are still hiring, but the industries that were former pandemic darlings like tech and finance, even transportation and warehousing, they're seeing job losses and weakness. And even with the big revisions that we saw in the payrolls data dating back from March to 12 months prior, we saw that that there were entire gains wiped out. And so if you're in those sectors, you're probably not as ebullient as if you are in, say, hotels or restaurants or even healthcare, where there's still quite a bit of hiring going on.
And finally, Dana, can I ask you about the housing market and the mortgage rates that people are facing if they're trying to buy a home or contending with if they're thinking about selling the home that they're in, that they have a lower rate on? How is that a factor in the perception of the economic health of the country that consumers feel if they're looking at home affordability that is the worst it's been in decades, rents that also are incredibly high?
Well, it's interesting. You actually see bifurcation in the housing market. Existing home sales are down in the dumps, and prices are falling year on year because mortgage rates are so high. Why would you move if you're going to have a higher mortgage rate than what you have now after you probably refinanced a couple of times during the pandemic? But then with new housing, we're starting to see a little bit of a pickup because you can't get an existing home. But all in all, affordability is certainly down because interest rates are so high. And also in certain markets, prices are still rising year on year because this is very much about location.